Assalamu Alaikum everybody, welcome back to the channel. In today's video I'm going to share with you 4 undervalued dividend stocks with a dividend safety score of 99%, which is the highest dividend score given by Simply Dividend website. It's hard to find quality undervalued stocks right now in the market. I do feel we are in a bubble, and because of that it makes it really difficult to find blue chip companies that pay dividend and obviously are Sharia compliant. And because of that, I thought I'm going to put together a quick video just to help you find these companies. One of the things I like about these companies, I do own them. I have quite a bit of money in them, and they are reporting their earnings this week. So you might have a chance, if there's some sort of a pullback, you might be able to get them in a discount. But before we start, please hit that like button. It really helps the channel. Like, I don't like promoting the channel on basically talking about it and saying please hit that like button and so on, but what I'm trying to do is show you my journey and obviously help somebody else. And the more people like basically the videos, the more the more people it will reach, inshallah. So that is please all I need. All I ask you is basically hit that like button. It actually takes quite a bit of time to put this together, and I just want to help it someone else, inshallah. If I can help one person out there just to invest in halal way and obviously to make some money, inshallah, in the long run. And I've been transparent with you guys from day one, so that will help definitely the channel, and obviously inshallah then I can produce more videos, inshallah, for you guys. So that's all I ask. Thank you very much. Let's now start with the first company. So the first company that we're going to look at today that's reporting its earnings on the tomorrow morning is Procter Gamble. Procter Gamble offers consumer packaged goods in the home care, cleaning, beauty, grooming and personal care categories. They own so many brand names. They're currently trading at $136. If you look at the currently basically how much, I'll show you their products. So the home care, family care, oral care, they basically do all of these things. And during obviously the lockdowns, a lot of us basically were going to the shops and buying their product in bulk because we actually do need those products. It's one of those companies that's been around for a long time. They are dividend kings, and they do pay very good dividend, and that's something I'm going to share with you next. So one of the things they do is they have 170 brands and in 16 different categories. All of these brands that you see in the shops, whenever you go to the supermarket, you definitely end up buying one of their products. They basically reporting their earnings tomorrow, so I'm not going to actually go through the whole the last earnings because there's no point. So hopefully once their new earnings comes out, then I can go over that and analyze it and let you guys know basically a bit more information that. But if you're interested, you can go to their website. Everything you need to know, well presented, is actually on their website, so you can actually check that out. One of the things I just want to quickly show you is basically their cash flow and obviously their income statement, because that's something that you obviously need to know. You can't just rely on what's going to happen tomorrow. So if you look at their total revenue is about for the last 4 years from $65 billion to 66 to 67 to 70 billion dollars. Their cost of revenue, so how much basically they spent in order to generate this much of income or revenue, was 32 billion, 34, and then 35. And as you can see, the difference is $32 billion of gross profit, then 32, is almost 32 and almost 33 there, and then $35 billion over there. Now when you look at their net income, 15 billion for 2017, then you had almost 10 billion, then about 3 billion. So around here you just need to look around and just check if they have made some sort of acquisition. So they bought maybe something new, or they must have done something to spend, or they paid some debt. So there's a reason why basically there's a drop from this to this. Okay, so sometimes companies obviously if they invest in something else, or if they do like a buyback shares and all that stuff. Okay, but last year 2020 it was about $13 billion. Okay, the next thing I'm going to share with you is their cash flow. So free cash flows, this is the money they will basically use for things like research and development, things like paying dividend and buying new companies, and increasing their product line, whatever they need to do. Basically, this is the money that is available to them. And if you can see here, 2017 was about $9 billion to 11 billion to 11, almost to $12 billion, and then $14 billion currently. The company is undervalued at the moment, according to Simply Wall Street. So it's about 13% undervalued. It has been undervalued for a while now, this company. And I have been buying, small shares here and there. And if you look at their dividend safety score, that's 99%. This is the highest given to any company. Okay, you can't obviously have 100%, so 99 is the highest. What that means is this company have enough money, enough cash to pay their dividend, and there's no dividend cut coming anytime soon. And again, that is for us, that's perfect, that's really good to see. So like I said to you before, the company is reporting their earnings tomorrow morning. They're expecting, their estimates are for the earnings per share, it's about $1.19, and their revenue estimate is about $18 billion, from last year, where they made about almost $20 billion. There's slight drop. Okay, so because of that, you might see some volatility in the stock, but again, double check tomorrow morning. If the earnings obviously do not match and something is gone wrong, obviously that gives you the opportunity to buy, because this company has so much cash and so much things going for them. They're not going to cut their dividend. They're going to be around for a while. Again, you can't expect this kind of company to, give you about 20% return every single year. These are the companies that will give you about 3 to 10% on 3 to 10% of return on your investment. Okay, so the next company that we're going to look at is one of my favorite companies around right now. That's Johnson & Johnson. This is a pharmaceutical company. This company is trading at the moment $162. It was down recently, and I'll tell you why. But before we do that, let's have a look at their product line. This company, obviously, they are both in the they might as well just be on their own ETF. They own so many different companies that basically come under the umbrella of J&J. So you probably have some of these products at home. You've probably seen in the news recently where basically they had to pause the vaccine for the COVID-19. And this is one of the things where I was very surprised to see a lot of people selling the stock because of this pause. Now, J&J are not making any profit from this for now anyway. Okay, so right now, as we stand, they are not making any profit. They are not selling this to any of, basically the profits are, basically they're not making any profit. So you're not going to see this in the balance sheet. So when this happened, a lot of people start selling the stock. I bought 2 more shares. I think I had 10 shares, and I've added to this. And the reason for that was because I knew that nothing has changed. The company is still the same, even though this is just like a pause and they're just trying to find out what's going on. Once that research is over, the company will go back to normal. And the other thing as well is they're not making profit. It's not going to impact the balance sheet. So why are we worried? Okay, so J&J is a great company. Currently, if you look at their balance sheet, you'll be surprised. So $76 billion in 2017 of revenue, then 81, then 82, then 82 again. As you can see, their gross profit $51 billion, 54, 54, and then 54. Now when you look at their net income, okay, from 1 billion to 15 and then $14 billion. Maybe this was because of what is going on, what happened last year. 2020, a lot of the companies are slightly down. It could be that, or it could be for other reasons as well. Now, currently, this is what surprised me as well. This company is basically undervalued by 33%. Even though the share price currently is 162, I thought it might be a little bit overvalued, but is actually not overvalued. It's actually undervalued at the moment by 33%. They're reporting their earnings tomorrow as well. Okay, so there's another company that are reporting their earnings tomorrow, I think before the market opens. So pre-market tomorrow, keep an eye on it. You will see if there's a drop. Okay, then it might be a good chance for you to buy a couple of more stocks. So they're expecting $2.35 in terms of EPS, and then revenue estimate is about $22 billion. And again, this company has 99% of dividend safety score, which is absolutely amazing. That means, again, there will be no cuts coming anytime soon. And I own about 12 shares, and I'll show you this towards the end of the video. Okay, the next one is Merck. This is a pharmaceutical company. They're reporting their earnings on the 29th. Their estimates for the EPS is about $1.63, and their revenue is about $12.6 billion. That's the expected. And when you look at the last few years, you can see they beat every quarter apart from the last one. So this will be interesting to see if they beat this one. And if they do, you might see the price share go up. I'm down slightly a little bit at the moment. I own about 15 shares, I think, or 17 shares or something like that. And I'm down a little bit. But let's have a look at the little bit more details. One of the main, one of the main things they actually sell, okay, one of their biggest basically drug they sell at the moment is Keytruda. This is basically, if you look at it 2019, it was about basically from 2019 to 2020, they've got 27%, okay, year-on-year increase for this. And apparently this is currently, I did a little bit more research, it's basically for cancer treatment, and it's apparently the best out there, basically, and the big selling cancer drug out there at the moment, which is really good to see. So again, a company with a little bit of moat, again, that's all you need, with actual, some amazing, I'll show you in a second their dividend score, but when you look at their balance sheet, you'll be also surprised. So total revenue, 20 billion, 22 billion, 26 billion, and then 27 billion. When you look at their gross profit, 27 billion, 28, 20, so you can see that it's growing again. Net income, 2 billion there, 6, then 9, then 7. So it's slightly down on 2020. And again, when you look at their free cash flow, so from 4 billion to 8 billion to 9 billion and then to 5 billion again. So again, it could be something might have happened last year, or maybe it was because of the corona or what's going on at the moment. Maybe they're starting a new new line of drugs or something like that. So I'm not sure why there's a massive difference between this and this. It was almost half, but it'll be interesting to find out. But again, when you look at their dividend score, 99%. Okay. So even though there's a slightly their free cash flow is decreasing and it's kind of gone down a little bit, okay, they are still able to pay their dividend. And the company right now is way undervalued, at 53%, almost to 54%. This company is trading $77.50 at the moment, and when you look at this, you're like, okay, you can literally almost double your price in the next couple of years if you actually buy and hold this company. Again, their dividend is actually quite good. Let me have a quick look. Their dividend, I think, is about 3% dividend. They've got 3.3%, and they're only spending about 40% of their net income to pay that off as well, and 11 years of growing their dividend, which is absolutely amazing to see. Okay, we're almost there. So the final company is Microsoft. Again, like I said, I'm not giving you a lot of details because I know you can do this research. If you watch my previous videos, you can check how I actually value companies. I'm kind of giving you a quick overview, and obviously what is to come this week, even though it's already a Monday. I'm recording this now just before the market closes, and as you can see here, this company is reporting their earnings on the 27th of April, so you might actually have a chance to actually buy a amazing company if there's a slight pullback maybe in the market next couple of when they release their earnings. Okay, so the first thing we're going to look at is their balance sheet. So again, if you look at the total revenue, about almost $90 billion, $110 billion, 125, and then you've got $143 billion. When you look at that, look at this growth from 55 billion to 72 billion to 82 billion to 96 billion dollars of gross profit, and their net income 21 billion, 16. Maybe they bought something, or maybe this is the time they bought some of these companies, the million companies they've been purchasing in the last few years. Okay, so you can see they've spent a little bit more money of that there, and then 39 billion, 44 billion as things stand. And if we look at their free cash flow, which is basically what they used to pay the dividends, 31 billion, 32, 38, and then 45 billion dollars. Now, if you've been watching the news recently, you would find basically they purchased this company, okay, which is basically, I think, it's a speech recognition firm. Okay, they paying about, I think it's about 20 billion. I've read somewhere where it's almost the basic 19 billion including debt. So about 20 billion dollars. One thing I love about this company is when they find a new company up and coming that is really good, that's doing some amazing work, they'll buy them. And they've now got a portfolio of companies they've actually purchased in the last basically 10 years, which is great to see. So what you want to see as you basically growth companies, especially companies like Microsoft and Apple, is the fact that they grow in the company, okay, they growing their top line and bottom line, as well as that they've got free cash flow, they're paying some dividends, and obviously the share price will go up in the next couple of years. Now they're reporting, like I said before, their earnings on the 27th. The expected EPS is 1.77, and then the revenue is about $40 billion. Now, as you can see, they've beaten that every single year, basically every single quarter, and hopefully will do the same. If they don't, then might be a good chance for you to purchase a couple of shares. Now, quickly, I'm just going to share my overall portfolio. So I own Johnson & Johnson. I have about 12 shares there. At the moment, I am basically 2% up. Could have had about 7 or 8% almost, but because of the FX impact is actually just only 2%, about 3%. I also have Merck in my portfolio, is down at the moment and about 1%, just getting it lost. But again, FX is just killing me because that's almost a 3%, 3.5%. Microsoft is the next company. I own about 12 shares. I think Merck, where was it? 17 shares of Merck, and then 12 shares of Microsoft. Again, I'm up quite a bit. Should be up about 27%, but right now it's about 18 because of the FX. And then finally, Procter Gamble. Okay, I've got 14 shares. Again, a little bit down, but overall, I'm actually on profit, but because of the FX impact. Okay, again, this was just to kind of give you a quick overview and some of the things that are coming up this week. Hopefully, if you have a chance and you actually like some of these companies, do a little bit more research. So please don't rely just on my quick information that I've just given you, but it will be great. So if you go to the website I'm using, it's called Seeking Alpha. You can type whatever company you're looking for. If you go to earnings, and then you will see upcoming quarter, then when you see this, if you know that when it's coming up, if you have a little bit cash lying around and some of the companies they're basically in your portfolio or in your watch list, then it might be a good chance to add to these companies. Thank you very much for watching. If you have if you're still watching, thank you, and please subscribe, like, and share with your family and friends. Have a wonderful day. Thank you very much. Assalamu Alaikum. Ramadan Kareem again.